Hello, ladies and gentlemen, and to all traders, and welcome to another free live webinar hosted by myself, David Kinley. And this time we're going for the important calculations in Forex trading. Now, we're going back to basics with a few of the calculations because a lot of traders and even new and old traders do get stuck with some calculations on the MT4 platform. So it's important to know exactly what we're looking at and exactly what we're doing. So just pull up my MT4 platform just for you to see here. So I've got a small balance here, just over $2,500. Equity and free margin are all the same because I don't have any trades open. So I'm just going to keep it on a blank canvas, so to speak, so that we can get off on the right setting. So let's just go through the first slide. These are the things that I'm going to look for in today's session. And I just want you to also understand anything that you want to ask me during the course of this presentation. I'm always happy to answer live questions, as I want the traders and participants to get the most out of it. So what we're going to be looking at is the margin, the equity, free margin, margin level, calculating the profit and loss, leverage, pip values and point values, swaps. These are overnight fees on open positions, and also pending orders as well. So as I said, stop me whenever you want if you want to catch up on any of the presentation, as I'm always happy to answer any questions. So let's just take a look first of all. So we've got the margin first of all. So the margin requirement is based on the volume, leverage, and instrument. So these three factors are calculated when we are looking at the margin. So I'm just going to have an easy example here, very simple. So we're trading euro dollar of one lot with a 1 to 500 leverage. So the price of the euro dollar, this was a few sessions ago, as you can see. Now the price is 1.09, I believe, but we'll just check this example. So 1.12862 multiplied the volume of one lot, which is 100,000 notional value in units. So one lot is 100,000, a micro lot is 10,000, and a mini lot is 10,000 and micro lot is 1,000. And then we divide by the leverage, which is 500. So we take this calculation here. This is the price times 100,000 divided by 500, and that will be the margin requirement for the one lot of trade. Naturally, the smaller amount of lot sizes that you trade with, the smaller amount of margin will be available. So we're going to look at the next example. So trading with a smaller lot size means we'll have a less margin, so 22.57. So let's just do a live example now. So everything's completely transparent. So we're going to open, let's open a smaller lot, 0.10. So let's buy that. So at the moment, I need $21.77. And this is a margin. This isn't taken from my actual balance. It is actually needed as a collateral. So you're not actually losing this money. You're just putting it up front in order to open this trade. So if we get the trusty calculator out, so what I'm going to do is put the price in. So 1.08830. Multiply that by 10,000 because I've got a 0.10 lot position open. And then we're going to divide that by the leverage, which is 500. So 21,766, and it's just rounded up to 21,77. So obviously we're just going to take the last two digits after the decimal point. It's been rounded up. So this is how we calculate the margin. So if we just close that trade and we want to open a smaller amount, 0.01, as you can see here, $2.18. So we'll just do that calculation, 1.08831, multiply by 1,000, and then divide that by 500. Oops, 500. So as you can see, because the lot amount is 1,000, it's giving me a less of a need to open. If you're feeling adventurous and you have the funds, obviously, you have the equity, we can open a one lot trade. So this is 100,000 notional value of the trade. So 1.08828, which is the price, multiplied by 100,000 and then divide by 500. So 217.6, again, it's just rounded it up by 1 cent. And as you can see here, 217.66. And then this brings into the equation as well, what we'll be looking at throughout the entire presentation is going on to the equity now. So how is the equity calculated? So based on your margin, we are looking at free margin and margin level, but the equity, oh, I'm in a profit as well, which is also nice. So the calculation for your equity is basically just your balance, and then it's plus or minus whatever your P&L is. So as you can see at the moment, I've got 2647 for the balance, and I'm plus $5, 2652. It's just moving carefully now. So that's $1 difference. But if we freeze the picture, just freeze it so it's easy to see, so it's not moving anywhere. So 2647.03 and 2652.03, and the difference between those two amounts is basically $5, and $5 is what was my open P&L at the time. So this is how the equity is calculated. Equity also equates to your real life funds in your trading account. Once all the trades are closed, your equity will be the same as your balance before. So if hopefully I'm still in the profit, oh, just about $7. So now that I've closed that trade, I've earned a nice little profit of $7. And as you can see here, everything has tallied up correctly once again. So this is for open positions to be important with your equity as well. So this, as I say, it all calculates and all comes under the calculation that we are looking at as well. So let's open just a smaller trade. So even if I am losing, I'm not going to lose too much. So let's go for a 0.12. Let's sell this time. Why not? So the next steps we want to look at is the free margin. So what is the free margin? This is the amount available to open more new trades. If there's not enough funds in the account to open more trades, then the message not enough money will appear. And the free margin is basically your equity minus the margin equals the free margin. So let's go back to the MT4 platform. So equity minus this figure here of $21.77 will equal your free margin. So if we don't have enough funds, we've got $21 out of the equity, which is fine. However, if we want to open a bigger lot size, let's say 10 lots, or let's go 20 lots, why not? I do not have enough funds because, let's see why. So what was the 1.0830? And I'm going to multiply that by 20 lots of notional value. So that's going to be, this is 2 lots. I'm going to do 20 lots. So it's 2 million. And then we're going to divide that by 500. So I'm going to need $4,353 in my balance in order to open 20 lots of euro dollar. And obviously I do not have that. So that's why it's giving me the message, not enough money. So that's an easy calculation, or even a calculation you can see when you are trying to execute a trade and you might not have, you get this sign, so you know the reason why that is. So we won't open 20 lots of anything anymore. And let's go back just to the final calculation on this slide, so the margin level as well. So the margin level is important because if the percentage goes down to 100%, we will have a margin call, and 20% is the stop out. I'll explain what these are in a second, but let's just take a look at the calculation. So equity divided by the margin, multiplied that by 100 equals your margin level. So my equity at the moment is 2,648. Let's get the trusty calculator up. So 2,648.83. And then multiply that by 21.77, which is my margin. And we want it in a percentage. That's why we're multiplying it by 100. So it's 12,167. Because my P&L is moving slightly, it's just moving a little bit off, but you get the general idea. And what this margin level means, it's very important because, as I said, if it drops to 100, then this gray line here that you're seeing will turn into red. And this will give me an alert on my MT4 platform to indicate that my margin level has dropped to 100%. And that would mean that I have to start looking at my trades and seeing maybe if I'm going to close any trades to help my margin level increase. If it drops to 20%, this is when we have stop out. Now, what is stop out is basically it takes your open trades and starts closing them one by one, depending on what trades are most in negative. It will start closing these off straight away, and it will give your account a bit of a help so it doesn't go down to 0%, and obviously all your trades will be closed. So one by one, if I had 5 trades open at the moment, all losing heavily, it would close the biggest trade deficit, and then my margin level will increase. There have been times, however, that all trades have been stopped out because there's been a major move in the market, and the margin level has gone even into a minus because there's big swings in the market. And this has happened a few times to a lot of traders. So just be careful, keep an eye on your margin level. That's probably one of the most important aspects of the MT4 platform, because this is what's telling you when your trades will be stopped out. Another small thing just to include is trades can be stopped out in a positive manner. So they don't all have to be negative, because if there are some trades that are heavily negative and one's positive, because your margin level has gone into zero territory or negative territory, all your trades will be stopped out, closed, and even the ones that are in a negative will be closed as well, because your margin level has dropped so significantly. So just to keep that in mind when you are trading, because it can happen, and it has happened to a lot of traders, and they've been confused as to why their positive trades have actually been stopped out, and it's not a nice place to be. So just to keep in mind for that. So as we move on, let's look at pips and points. Now, as I said, any questions that you might want to ask me, go ahead, as we are live and it's always nice to get some interaction. So pips and points were quoted as the 4th and 5th digits in most Forex pairs, and quoted as the 2nd and 3rd digits in yen pairs. So we've got an example here again, euro dollar. So 1.12259. So this is the 4th digit. This is the pip, and this is the point. So it's 5.9 pips or 59 points. So 5.9 or 59 points. And with yen pairs, it's the 2nd digit. So we've got 3.1 pips or 31 pips, based on however you want to look at that. And these are the pip values per one lot. It's important per one lot because it's just in the calculation. So let's just check what's happening now. So a dollar quoted currency, such as the euro dollar, pound dollar, Australian dollar against the American dollar, these are all $10 a pip per one lot standard. So whatever happens, every time a pip goes up and down per one lot, it's $10. So the trade that I've got open at the moment, because it's 0.10, it means that it's 10 cents a pip. So every time this goes up or down here, so we've got 1.08830, 1.08825. Every time this goes up or down, as you can see, it's going up and down 10 cents, because that's the value of the pip there. So just something to remember. As you can see, if this was a one lot, they would be going up and down in dollars, $1, $2, $3, $4. So something to remember there as well. And these are all the other main basket of currency quotes as well. So we've got Swiss franc. So this is 10 divided by the dollar Swiss franc rate. So let's just take a look at these rates at the moment. So dollar Swiss franc, what we're looking at here, 0.93.9. So we do $10, 10 divided by 1.0, oh, so I'm looking at the wrong one, 0.9309. So approximately dollar Swiss franc pip per lot is $10.74. So it's just a little bit higher than the dollar $10 pip value. Let's take a look at another one. So yen, 1,000 divided by the dollar yen rate. Let's just take another look at this. So we've got 1,000 divided by the dollar yen rate, which is 125.58 approximately. So there you go, approximately $7.96 per lot. We're just taking the 2 digits after the decimal point. Dollar CAD, won't go through all of them. I just want you to get a general understanding of what we're looking at here. So 10 divided by the dollar CAD rate. So what is the dollar CAD rate? 10 divided by 1.2628. So 7.91. So you just get a general understanding of what pip values for the pairs are stronger than others. As I said, with the quote currency pound dollar, it's $10 round every time. Dollar yen, we saw that just under $8. Dollar CAD just under $8. Dollar Swiss is $10, almost $11. So it is more stronger. Pound pairs are very strong as well. I'll show you why, because it's 10 multiplied by the pound dollar rate. So when you're trading pound dollar, so when you're trading pound pairs like the euro pound, 10 multiplied by 1.30236 approximately. So as you can see, $13, just over $13 a pip for the euro pound. And any pound pairs that you see, there aren't many, but if you do see any more pound pairs, these are the ones that are more stronger because of how the value is and the pip value calculation as well. So that's very important to note when you're trading, because it gives you more of a guidance on what's stronger and what's not as strong. So with that being said, let's go on to calculating the profit and loss as well. Now, it might seem very, very easy to calculate profit and loss, but based on your MT4 platform base currency and depending on what trade, what currency you're trading on as well, it could actually be very different. So let me just close this. Oh, I'm in profit again. It's actually been a good presentation so far. I'm making profits on my demo account, so very nice. Let's open a one lot on dollar yen. I'll show you why in a minute because we're just looking to see what these calculations are. So euro dollar equals $10 a pip. So this is per one lot. So I've opened a trade and I've got 5.3 pip profit on a two lot trade. So the calculation is as follows. And what I mean by 5.3 is, let me just go back to here, go to my account history for today's. So euro dollar. So I need to know how many pips profit I've got at the moment. So my closing price is 1.08804. And we minus 1.08830. No, I've done it the wrong way around. Actually, I need to do the open price. So 1.08830, sorry, and then minus close at 1.08804. So this 1, 2, 3, 4, this is my pip and this is my point. So I've got 2.6 pips. So 2.6, multiply that by $10 a pip because it's euro dollar. And then we're multiplying that by the volume, 0.10. So 2.6, so $2.60. And if you see my P&L there, $2.60. And we'll just do the other one as well, which is 1.08828 minus 1.08834. So again, we've got 0.6 pips. Forget the minus because I did the minus the other way around, but this was a profit, 0.6 pips. 0.6, and then we're timesing that by one lot. And then we times that by 10, which is the pip value per lot for euro dollar. And that's $6 profit. And as you can see here, it's $6 here. But for euro dollar, it's very simple because it's always $10 a pip, no matter what happens. So let's just take a look at another example. So we've got dollar CAD. So I need to get the dollar CAD rate. So 10 divided by dollar CAD rate, which is approximately $8. Done this so it's just a little bit easier to sum up. So again, if we take that profit of 5.3 pips that I made on this imaginary trade, times it by $8 and times it by two lots, because that's the example that I've given, which means I've got an just over $84 profit on that trade. And this is because of the amount of pips that I've won, the pip per lot, which is roughly about $8, and the volume size as well. So this all comes in together. And also on dollar yen, again, we need to find out what that pip value is. 1,000 divided by dollar yen rate, which is approximately $8.80, sorry. So again, based on that pip amount that I've won, 5.3 pips, times by the pip value, times by two lots, which means 93.28. So I want to give you just a live example of that, because that's why I opened this trade. So I'm just going to freeze this and just take a quick screen grab. just so it's a lot easier. So now what I'm going to do is open price 1.25.598 minus 1.2558. So 1.8 pips. And because I did a buy position and the current price is lower than the open position, then I know that I'm in a minus already because I want to buy. If I was selling, it would be fine because the current price is lower than my open price. So 1.8 pips is what I'm losing at the moment, 1.8. Multiply that by approximately $8, which was the dollar yen pip value amount, and then times it by 1, which is the lot amount that I have open at the moment. So 14.4, 14.33, and this is because I did it approximately $8. Now let's find out what the exact pip value is for that, because the way that we can find out what the exact pip value is, we take the 14.33 and we divide that by the amount of pips that we were making. Now I've actually forgotten how many pips it was. Let's just quickly go back. 1.25, oh no, 125.58. So it's 1.8 pips. So I just have to keep that in mind, 1.8 pips. So divide that by 1.8 pips and then divide that by the lot size. So 7.96. So that's the exact pip amount for the dollar yen pair when I opened this trade. So that's just an easy example of how to see the exact pip value that you open the trade at. Because if I did 7.96 now, let's just remember that figure, 7.96, and we do 1,000 divided by 125.592. So yeah, there you go. It's pretty much the same, 7.96 to the live price now. So it's 1,000 divided by the dollar yen pair. And that's how we get the pip value. But if you want to get the exact pip value, because this trader could have open for a few days and I might, the price might be a lot different. So let's just say we drop down to 124 for the dollar yen. So if I do 1,000 divided by 124, as you can see, my pip value has gone up just over $8. But at the time that I opened this trade, the pip value is a lot less. So that's just a small calculation, an extra calculation, quite helpful actually, that I usually give to my traders when I'm when I'm making educational webinars like this, or even educational emails, just to let you know that there is a calculation to see what the pip value was based on this open price at the time of your opening this trade. As I said, any questions, let me know. I just have a live question here. So the margin is $200 for this trade. Yes, that's right. So what we do now for the dollar yen, because we had the margin example that I gave before was for euro dollar. Because dollar yen, the base currency is dollar, all we have to do is take the price 125.598 divided, multiply that, by 100,000, which is the lot size, and then divide by 500. And then we have to divide again by the dollar yen pair, because yen is is not the same currency as the dollar, because my base currency here is dollar. So we have to always go back to the dollar with this. And so theoretically, all we're doing really is doing 100,000 notional value because of the one lot, and divided by 500, and that's 200. So that's basically the calculation for margin for dollar yen if I want to open $1. So just something to keep an eye out for as well. But the good thing is about having a demonstration account or a demo account is to work out and just play around with all these calculations so that you're a lot more better off. As you can see here, my margin level has dropped to nearly 1,000. So I have to keep an eye on that to make sure I don't go down to 100. I'm a long way away, but you never know what will happen overnight when I'm not actually on the MT4 platform. So let's look at other calculations now that could help you. So I've just given this example here as well as I said, just so it's a bit more in black and white. So the dollar yen trade, we've got a P&L of $98.08. I'm dividing that by the 5.3 pips that I've won, and then which equals $18.50, and then dividing that by the two lots. The two lot was the trade originally, and it's $9.25 a pip. So that was based on the fact that I won 5.3 pips. I've got two lots, and it was the amount of funds that I was winning at the time. So it's just another calculation there. So leverage calculation. So if we want to lower the leverage, now my leverage is on 1 to 500 at the moment, but if I wanted to lower the leverage because I was thinking that I'm too over leveraged, I want to go down to maybe 1 to 100, maybe 1 to 50, 1 to 200, something like that. If I'm increasing my leverage, it will not really affect my open trades as my margin level will not be lowered. However, if we're decreasing the leverage, it will have an impact on open trades and could also change your approach to future trades. So let's see the calculation of this one, because it's actually very important as well. So we've got old leverage divided by the new leverage. So let's just give an example here. So my current leverage is 1 to 500. I want to lower it to 1 to 100. So this means it's 5 times smaller. This indicates how much smaller my leverage will become. So and then we divide the current margin level by 5, and this will give my updated margin level. So let's just see that live, because I don't want to, as I say, confuse anything. So at the moment, my current leverage is 500, and I want to lower it to 100. So this means it's 5 times smaller. So my margin level currently is 1320, and I want to divide that by 5. So this will be my new margin level, because I've got open trades. So if you ever want to lower your leverage whilst you have open trades on your live account or demo account, just be reminded that your margin level will drop because you're lowering. However, just make sure that it doesn't dangerously go too close to 100% or even 20%, which is the stop out. So really, if I want to go from 500, maybe I should go to 1 to 300. That might be a little bit better. So that's 1.66 times lower. So again, 1320, because that's my current margin level, and then divide 1.66, and that gives me 795.18. And this is a decent margin level. It's not too close to 100. I'll still be able to open some more trades, and I will have that benefit of not stressing too much about what's going to happen in the near term to my trades as well. So my one lot of dollar yen isn't doing too well at the moment, but let's just take a look at that calculation. So it's live. So I just did that. So we've moved a little bit lower now, just so everything's fully transparent. So let's get the trusty calculator out. So we're very, very easy to see. So 125.598 minus 125.579. So I'm in a deficit of, because it's in a minus, 1.9 pips. So 1.9, and then the pip value is roughly $7.95, and then I'm going to multiply that by 1. So $15.10, $15.13. So I'm a few cents away because I didn't get the exact pip amount, but we can get the exact pip amount because we checked it before. So let's just quickly check that again. So 1.9 pips difference. So just remember 1.9, so 15.13, because that's my P&L, divided by 1.9 pips, and then divide by 1. So we don't really need to divide by 1 because it'll be the same amount anyway. However, if you do have a micro lot open or something smaller open, then let's just give you a live example. So if I put in a 0.1 lot amount, then, which is wrong, I'll have to, actually 1 second, 0.1, I'll have to multiply that by 0.1. So my pip value will go from $7, nearly $8 a lot to 80 cents a lot, because this has been lowered. And then the pip value will be lowered even further if I do a 0.01 lot or a micro lot of any amount, 0.05, 0.06. You get the general idea. So this is why it's important in the calculations with your lot size, the pips per lot, and your leverage as well. So these three factors, the main factors when calculating a lot of the margin P&L and other things that we've been going through at the moment. So next on the calculation list is swaps. Now, what are swaps? Swaps are basically fees that the MT4 platform is calculating automatically for trades left open overnight during the rollover. Now, what is the rollover? The rollover period is the period that, let's just show you on this. So you see all the dates at the bottom here. Let's go to a 15-minute chart, might be a bit easier to see. So currently we have the 11th of April today. And as you can see on this gap here, this is the weekend gap. So we've had a close on the weekend gap here, which is the 8th. And now we are looking at a new day and the market has opened here. So trades that were left open overnight, this could be any night, by the way, get a swap fee applied. And this is how we calculate swaps. So the calculation is per one lot. So this would be one, for example. So pip value per one lot on the Forex pair times the volume of trade, which will be one. Pip long and short, which is, I'll show you where to find them, and the number of days. Important to know that swaps are only applied to active market orders, not pending orders. So I've just had that live question as well, asking me if swaps are applied on pending orders. Then this is not correct. Swaps are only active for market orders, which is open orders in the market at the time when the rollover commences. So we're going for pip value per lot. So if it's a euro dollar, something nice and easy, that would be 10. And then volume of trade, 1, let's say, so it's still 10. Number of days, let's just say 2 days, so that's times 2, and then pip long or short. So let's just take a look at the specifications. So if you go to euro dollar, for example, right click, go to specification, and then this screen will come up. So it's here, swap long and swap short. This is in points, which is very important to know. It's not actually going to be $5.91. It's going to be 0.591. So it'd be 59 cents. And the same with this as well. This will be 13 cents per one lot. It won't be 1.3. So this is something to keep an eye on as well. So let's just take a rough calculation on that. So if we opened 2 lots of buy position on euro dollar, it would be 2. Multiplied that by, let's say, 2 days we left it open, multiply that by 0.59 cents. And then we are multiplying that by, let's say, 1 for the volume of trade as well. So it'd be $2.36. So these are the important swaps calculations to be prepared for. So it's the pip value of the Forex pair. So that would be $10 if it's one lot. For euro dollar, like I just gave the example, it would be 0.1 or 0.01 due to if it's a micro lot or a mini lot. And then the volume of trade, how many lots you have open, or whatever volume you have open, pip long and short, which is the MT4 specifications that I've just shown you, and multiply that by the number of days. So with that being said, I just want to take you through a few other examples here, because not all swaps are in a negative. As you can see here, putting a sell position in on the euro dollar overnight will benefit because there will be a positive charge and not a negative charge. So these are live updates on the MT4 platform day by day. So just have a look out to see. As you can see here, they're not all in a negative. If you go long on dollar yen, there will be 60 cent approximately, 6 cent, and short will be a negative charge. So it's just a case to have in mind. If you can take advantage of any swaps, obviously these two are in a minus, it could affect your trading portfolio. If you see a very big negative swap or a very big positive swap as well. If something is very, very small, as you can see here, this is a positive, that's in a negative, short and long. And again, negative, negative. However, for a selling position, as I said, this is in points. This is going to be 0.01. So it's like 1 cent, which is very, very, hardly nothing for a swap amount, depending on your volume as well. So very important to note in that respect as well. So as we come to the final part of the presentation, I just want to take you through pending orders. I touched upon pending orders in my last presentation on the basics of foreign exchange trading. However, I just want to go a little bit more in depth with the two types of orders that the MT4 platform offers. This is a pending order and a market order. Now, what is the difference? We've got two types of stop pending orders, which is buy and sell, and two types of limit orders, which is buy and sell as well. And what are the differences? Well, we've got buy stop. So the order is placed. This is basically the bid line. So the bid line is the line that you see on screen all the time. Let's just take another, just move some of these so it's a little bit easier to see. So this is the bid line at the moment. Just remove the ask line for now, because I'll explain that shortly. So the bid line is always on screen because it shows you what the current price is of the Forex pair. So for euro dollar at the moment, 1.08824. This is the white line going across the screen. So with that being said, this is the bid line. So the order is placed above the bid line or the price line and is expected to keep going higher. So we've set our pending order at the green line here. The price has hit, the order has been executed and opened, and then the market is expected to keep on going higher. Similarly, the sell stop is the other way around. The order is placed below the price line and is expected to keep going. So the market is currently trending up here. I'm expecting this line to be hit and then the price to keep moving lower. Once this price is hit, my sell stop position will be activated in the market, and then my trade will be open, and hopefully the market will keep going lower and I'll keep making a profit. On the other side of that, we have the limit orders. So we've got buy and sell limits. So the buy limit means the order is placed below the price line and is expected to bounce and retrace. So on this example, these are the pending order lines, not the price line. So imagine the price line is currently here where this arrow is. My order has gone below the price line. It's hit my pending order mark, and then we're expecting a bounce and a move higher. And the other way around, for a sell limit, the order is placed above the price line as expected to bounce and retrace. So basically stops are expected to keep on pushing higher and lower in the direction. However, limits, they're retracing slightly and then moving in another direction. So let's just see a live example. Once again, always like to give these live examples because they're a lot more easier to see. And also I'll show you where they appear on here. So let's just, what have we got open? Euro dollar. So euro dollar, for example, we go to pending order. So one volume, it's not really a problem. So I want to open a stop first, so a buy stop. So we said before that it needs to be set above the bid line and we're expecting the price to be higher. So what I'm expecting here, let's just get a nice level. So this is a nice level. This is the last time we had a slight retracement. So at 1.0925, I'm expecting that to be hit. And once it's hit, I'm expecting the price to move higher. Simple as that. So euro dollar, pending order. So we go to buy stop, and what was the price? It was 1.09254, and then we place So if I just move, I want to actually move this red line out of the way. And there you go. So that's my projected pending order there. And the pending orders come below the active orders. These are my active orders. Well, I've only got one open at the moment, and these are the pending orders. If the pending order is close to being hit, this will turn green. The price will turn green. So you'd have a green notification that the price is close to being hit. And as you just saw there, you can actually modify it by either right-clicking and go to modify delete order, which will give you, you can put a new price in or delete. Or you can just double click, click once, So let me do it now. Click once, drag it up or down, and you can actually move it higher or lower. And in your journal, it will give you the information here. So pending order buy stop at 1.09254, the order was opened, meaning it was set, and then I've modified it because I dragged and dropped it a couple of times. So this is how we're looking at the confirmation that it's gone from 1.09276 to 1.09329 because I've modified it myself. So just another little thing to keep an eye out for. Another thing is make sure that the price is at least not too close to the bid line. So open price must differ from the market price by at least 5 points. So the current price is 1.08813. If we go to 1.088120, let's say, it's giving me invalid stop loss or take profit because it's too close to the market price at the moment. So it just has to, depending on each Forex pair is different, but this one needs to be at least 5 points away. And let's set our sell limit as well. Sorry, our sell stop. So I'm going to do a sell stop as well. And we're going to roughly put it down to 1.0850, let's say 1.0850. So that's where I think roughly it's going to, if it does hit and open. And as you can see, it's here in the bottom. Another thing I want to let you know is a lot of traders seem to mix a lot of the pending orders up. So if you've got if you want to put a buy position in, so a buy stop, as I said, it has to be the entry price has to be above the bid line because we're buying, so it's going higher. If we put in something below the bid line, let's say 1.0825, 1.0825, it won't take it because it has to be above the bid line. So just remember that buy stops have to be placed above the bid line and sell stops have to be placed below. So let's get rid of these two because now we get to the slightly confusing part because we've got limits now. Now, the thing with the limit, it works in the opposite way, basically. So for a sell limit, I'm expecting the price to move higher, get to a certain point, and then hit that point and then move lower. Just move this other way so it's easy to see. So this is a sell limit. So sell limit, the entry point is placed above the bid line. I'm expecting the price to hit at 1.0966, let's say, and then move lower. So that's the whole point of a limit order. It's limiting the amount that it's going to go. But because it's a sell position, we're hoping that in the long run, we're going to sell. So let's just see that in a little bit better. I'll move the line so you can see the entry position. So let's just say 1.0976. So pending order, sell limit, and 1.0976. So it's let me open it. Let's just put that up here with it. So I'm hoping that currently the price will move higher, hit my sell limit, and start moving lower. And conversely, for a buy limit, I'm hoping that the price will move lower, hit a certain point and then start moving higher. So it's like an opposite effect, but we have to place it below the bid line. So this is where it gets a little bit confusing. So a buy limit, 1.0825. And again, it's let me open because it's below the bid line. And if we do that again, buy limit, and we put in this price because it's above the bid line, 1.0976, let's say, it's not going to let me because it works in a different way. The limits have to be the opposite way around and the stops have to be above and below. So because my buy limit is above the bid line, it didn't let me open it because it has to be below. So just remember that buy limits work the opposite way of stops, where we have to put the price in below. And let's just take a look at sell limit. So a sell limit, that needs to be placed above the bid line. So if I try and place it below 1.08255, 1.08255, place, again, invalid stop loss and take profit because it has to be below the line there. So just keep that in mind when you are looking at pending orders, what the correct way of setting the pending order so you're not getting caught out and everything is fully transparent, so you're not missing anything. Well, that's pretty much all from me in today's webinar. I'll stay online for another 10-20 minutes to answer any questions that you may have. There's always questions from a lot of traders that I get after the presentations because obviously they're digesting everything, making sure they're understanding everything. But just to let you know that next week we'll be trading with harmonics, harmonic patterns in the market to understand what is harmonics, how to identify them, and how can we trade with them using the Fibonacci tools as well. And after that, we've got Elliott waves for beginners, and this is making sure that we are looking at what are Elliott waves and what are looking how we can use Elliott waves in our daily routine and to see all the patterns, zigzags, diagonals, impulses, motive, all the motive and corrective waves in total. Just been asked, can I have the slides? Yes, please send me your email. If you want the slides afterwards, feel free, send me your email and I'll be able to provide that as we go. Okay, great. Well, the recording will be on our YouTube channel. I can't actually send it to you because I haven't recorded it myself. My team are actually recording it, so it'll be on our YouTube channel to see again. But I'll be able to let you know the slides. So, yes, Orbex, we have our own YouTube channel. Just go into YouTube and go to Orbex, and you'll be able to see my daily stock watch videos that I do a daily video there just to see what the market opportunities are for stocks and things like gold and oil, and also everything else that's going on in the market. And also we have designated videos for different topics as well. And don't forget to check out our blog as well. And thank you very much as well. And we'll speak again next time. So as I said, I'll be online. Please send me your email addresses if you want to have if you want to have the slides. And I'll catch you at the next one. Thank you very much, and we'll speak again soon. And as I said, I'll be online for a few more, as long as I need to be, just so that you get all of what we are looking at the moment. So I'll send you the slides shortly, and thank you very much, and catch you at the next one. Bye for now.